This is a video that you have requested for a long time. Today we are going to talk about the secondary market, about how to make money buying and selling in the secondary market of crowdlending platforms. Before we begin, I would like to invite you to the Telegram channel, where you can share opinions and experiences with other investors. Also, I would like to invite you to subscribe to this channel so you don't miss more interesting videos about crowdlending. And now, let's get to it. The secondary market is a tool that many platforms provide us. It is used so that we, the investors, can buy and sell loans before maturity. It is mainly useful so that we can sell the loans before they end, and thus we can have liquidity and have our money available before the loan term ends. So at any moment, we can decide that we don't want to invest and we can put it up for sale. And if another investor is interested in buying it, we can sell that investment and have our money. But we can also benefit from this secondary market to make money off of it, not only to get rid of our investments, but also to make profits with it. And we are going to see in this video how we can do it. If you still know very little about how the secondary market works, I recommend this other video where I explained in more detail what it consists of. That way you can have a much clearer view. Here we will mainly see how we can make profits by selling, but also by buying in the secondary market. For this, the first thing we need to look at is which platforms offer us this secondary market. For that, you can go to the happyeuros.com website and the best crowdlending platforms page. Here, about halfway down the page, you'll see there's a comprehensive table where each of the platforms is analyzed, and a ranking of the platforms has been created. And in this table, we can filter here as we have the features that all these platforms that we've analyzed on the channel have. Let's go to the ranking, and here in the ranking we can filter by those that have a secondary market. We only mark the ones with a 1. And here we see all the platforms that offer us a secondary market. But there are some platforms that offer us a secondary market or a way to sell our loan directly. In this case, since we are talking about making money by buying and selling loans on the secondary market, we are not interested in platforms that offer the possibility of selling loans directly, such as the RoboCash platform, since here we sell the loan directly to the platform. The same thing happens here with the Bondora platform, where it is stated that it has a secondary market, but in reality what it does not have is a secondary market. Instead, we can sell our loans. In other words, we can get rid of our investment at any time. These are not of interest to us, but we are going to talk about the other platforms where we can buy and sell loans in the secondary market itself. Among these platforms that offer a secondary market, we have Mintos, Twino, Esketit, Estateguru, Heavy Finance, and Lande. Although with Lande we will see that it does not offer us the possibility to sell at a premium or at a discount. We also have another real estate crowdlending platform, which is Reinvest24. However, now doesn't work the secondary market anymore. We won't include Swapper here, we're not going to talk about it, because on this platform it's also direct selling. We can sell the loans directly like on RoboCash to the platform, but it doesn't have a secondary market as such. And there's Bonster and Afranga too. And there is another platform that is not included here, but I would like to mention it as well. It is not included here because it practically didn't exist when this ranking was made. It is a new platform called Crowdpeer, which also offers us the secondary market and is very interesting. Moreover, everything is very well explained on this platform. In fact, we are going to start with this platform by seeing how a loan is sold on it, as it is very simple and serves as a foundation for learning. To sell a loan on this platform, and on most of them, we will have to go to My Investments, and in My Investments we will have to choose the loan we want to sell. Let's choose this loan here, for example, and we'll have to click on Sell Investment, and here it will display this information about the buying and selling of this loan. And this is where we will be able to see very important information. On one hand, we have here the sale price, how much we want to sell our loan for. And it will also show information about the seller. In this case, we are the ones selling what we have earned with this loan up to now, up to today. These are the interests I have earned with this loan. It will display below what the buyer is expected to earn with this loan. In this case, the buyer could earn approximately 5.19 euros with that loan of 100 euros. As you can see, this information is very well explained, and it is important that we understand and evaluate this information because the buyer will also assess it, and because we want to know if we are gaining or losing with the sale of that loan. And here in selling price, we are going to decide at how much we want to sell the loan, what price we want to set. Right now it is at 100, which is the price I paid for that loan. If I sell it for 100 euros, a commission will be charged in the secondary market. Crowdpair, in this case, or any other platform, usually has a commission for the sale of loans. It is usually only for the sale, not for the purchase. So when I am selling the loan, if I am selling it for 100, I will be deducted 2 euros, so I will receive 98 euros. So when I'm selling the loan, if I sell it for 100, I will be deducted 2 euros, so I will receive 98 euros. With this loan, I have already received 3 euros and 83 cents of interest, so even if I sell it at that price, at the same price for which I bought it, I will have already made some money with that loan. In other words, I haven't lost money with the sale of that loan. But what we want here is to make more profit, so if we want to make a profit, we can set a higher selling price. That higher sale price, as we see here, as we modify it, changes and shows us the amount we will receive from that loan. We must consider, and that's why this platform seems very clear in its explanation, that it also has to be attractive to the buyer. If the loan is not attractive to the buyer because they will not receive any benefit from it, then it would not make sense for them to purchase it. And in this case, for example, imagine if I sell the loan for 105 euros and 39 cents, the buyer will only get 5 euros and 19 cents in interest, which means they would be losing money on that loan. Since the value of the loan, the principal of the loan is 100 euros, and I am charging them 105 euros and 39 cents, so this would not be profitable for whoever buys it. But if I were to put a different amount here, for example, 103.23, I would be receiving profits from this loan just from the sale, without taking into account what I have already earned from interest, and the buyer would also benefit from this loan. Other platforms, such as for example Esketit, have a much simpler system where we just need to click to sell, and here we can only set the discount or the premium we want to apply to this loan. When we add a premium, it means we will receive a percentage of that loan, an additional percentage. If we apply a discount, it means that it will be deducted from the amount we have set to sell for the loan. As we are here to see how to make money with the secondary market, we could add a 2% premium to this loan, and that is what we would be earning. As you can see, in addition, on Esketit, the maximum premium you can set for the loans is limited to 2%. For example, Crowdpair, Esketit, or even Afranga, where we see that there are not many loans in the primary market, where there has been at times cash drag, or there are not many investments in the primary market to invest as it can be in real estate crowdlending platforms. They are interesting to sell loans at a premium and actually sell them, although just because we put the loan up for sale doesn't mean it will sell. For example, here in Afranga, we have loans that have a premium of 15%. I doubt very much that this loan, for example, will be sold, because if the buyer is paying 15% and the interest on the loan is 11%, it will never be able to cover that 11% of that loan, even if the loan was for 12 months. But we see that there are other loans that have a more reasonable premium. This premium of 0.3% can be interesting for the buyer and the seller. Other platforms like Twino also have a secondary market for loans and where we can put a premium on them. The same happens on the Mintos platform. If we go to the secondary market, we will see that there are loans with premiums which are sold at a higher price. When we see loans in the secondary market with a premium, there may be an opportunity, there may be a market for us to do it. In any case, when we put a loan up for sale in the secondary market, that loan remains ours, so we do not lose the interest that loan generates. So we lose nothing if that loan does not sell. So, if what we want to do is make money by selling loans in the secondary market, we have to consider the premium that we are going to put on the loan, bearing in mind that depending on the premium, it will be more or less attractive for the seller, and we will be earning more or less money. But we can also make money by buying loans on the secondary market. For that, we will have to buy loans at a discount. In this case, we can continue. For example, let's look here at Mintos, where we have several loans that offer us a small discount that can be beneficial for us if we are interested in that type of loan. Here we don't see any with a very high interest, and the discount it has is not very high either. But we can select here in the filters on Mintos. We can go to discount premium. Let's set loans here with any discount down to less than 0.1 that have at least some discount. And here we will see the loans that come up for us. As we can see, there are some loans, almost all of them have a very small discount of 0.10 or 0.20. If we are interested in any of the loans, we could invest in one of them. As you can see, there is no interesting offer because the interest rate they are offering us for these loans is also very low. Where we will be able to see loans with large discounts is on Estate Guru, but in most of the cases they are loans with delays or in recovery. Loans with delays are often sold on the secondary market at a discount. Are you not interested in buying them? Well, sometimes, even if there are delays, we might be interested in buying them. For example, if we know something is going to happen, if we know there are going to be changes. For example, some time ago on Reinvest24, I had a loan for sale that was overdue with a discount. I didn't make money there and that loan was sold before the payment arrived, but when the news came out. So if we believe that the loan that is overdue will be repaid, it can be very interesting to buy a loan that has a significant discount or as a somewhat risky form of investment. But it can also have very significant benefits. As you can see on Estate Guru, there are loans with a discount of up to 20%, so we can also make money by buying loans on the secondary market at a discount. But besides the direct profits we can obtain from buying or selling at a discount or with a premium, I would also like to point out that there are other opportunities in the secondary market that might be interesting for investors. One way is to buy loans with higher interest rates even if they have a premium. That is, we are paying a little more for the loan, but in the long run it will be beneficial for us to have that loan, which is also why investors might be interested in our loans when we sell them at a premium. For example, we see here that there are some loans with an interest rate of 16.6%. This is the interest the loan is offering us, and here we can find it with a premium of 3%, meaning we will pay an additional 3% for that loan. That could interest us. In this case, it is a very small investment. It wouldn't make much sense. But if it were a larger amount of money, for instance, even this loan we see here offers us 17.5%, and we could pay 5% more for that loan. In the long run, we would be getting a good interest. Something we must consider when going to buy a loan that has a premium is that the interest rate we see here is the annualized interest rate. This percentage is annualized. However, the premium is an absolute value, a percentage that is charged to us which we will pay when we purchase the loan, and this will influence for two reasons. First, because if the loan were to be paid off early, just imagine, we buy the loan today, and this loan is a loan for 15 months. If this loan reaches its completion, we would be earning quite a high percentage. Since it would be that 17% per year, considering that it is a bit more than a year, it would be a little more than that for the total loan. But we would deduct 5%, even so it would be a high percentage. But if the borrower wants to repay that loan the next day or the next month, paying it off early, then with that loan we would have lost money because we paid 5% to purchase that loan, and the interest we've received back has only been the interest for 1 month. So that's something we must keep in mind. So in short, money can be made by buying and selling on the secondary market, but almost always you have to go against the trend a little. We will have to sell loans when there are no loans in the market. For example, in Esketit a few months ago when there was cash drag, there were many loans, many investors were selling them at a premium and of course investors were buying them at that premium. Which means that we would also have to practically run out of loans in order to sell them, but we can make profits. The same happens when we want to buy. When we want to buy a loan at a discount, we will normally have to buy loans that are not of good quality and buy them with that discount, and there we could make a profit. On most platforms, we're going to have to do it manually, but there is one platform, Mintos, that offers us the possibility to invest automatically, to create an auto-investment strategy for investing in the secondary market. Now you know how to buy and sell in the secondary market and make profits. If you have any questions, feel free to leave them below in the comments. You know I answer all questions. I also invite you to join the Telegram community where there are other investors who share their opinions and experiences about crowdlending platforms and their investments. If you want to start investing in any of the platforms we talk about on this channel, some of them offer welcome bonuses for new investors. Below in the description you can find all the links to take advantage of them. If you liked the video, hit the like button, thumbs up, it makes me happy and it helps the channel grow, and do not leave without subscribing first so you won't miss more interesting videos about crowdlending. See you very soon.